Welcome to CA Gayatris Academy, and today we are going to discuss what are the principles and objectives of bank audit. Principles of bank audit. Bank auditing principles encompass a range of practices aimed at ensuring the accuracy, integrity, and compliance of financial records and operations within a bank. Some key principles: independence. Auditors must be impartial and free from any conflicts of interest among themselves. Due professional care. Auditors should exercise diligence and competence in performing their duties so that there is no risk later on or no arisal of fraud. Maturity. Auditors focus on items that significant enough to influence the financial decisions by the different stakeholders. Segregation of duties. There should be separation of duties between those who handle the assets, who record the transactions, and those who authorize the transactions to prevent an occurrence of fraud and errors. Compliance. Auditors ensure that the bank's operations adhere to legal and regulatory requirements. Confidentiality. Auditors must maintain confidentiality of information obtained during the audit process. Then we have audit evidence. Auditors collect and evaluate sufficient appropriate audit evidence to support their conclusions. Reporting. Auditors communicate their findings and recommendations clearly and objectively in such a manner so that it can be used in taking decisions by the different stakeholders, be it management, that is insiders, as well as outsiders, the different stakeholders. These principles guide auditors in assessing the financial health and compliance of banks, ultimately promoting transparency and trust in banking system. Banks audits are comprehensive examinations of the bank's financial statements, its operations, its internal control systems, and compliance with the regulatory requirements. These audits are typically conducted by external auditors such as accounting firms or internal audit teams within the bank itself. Objectives of bank audit. The objectives is first ensuring the accuracy and reliability of financial statements, assessing the effectiveness of internal controls to mitigate risks such as fraud and errors. So this fraud and errors does not occur, and this ensures that the bank audit is done in a very correct form so that the system is improved as a whole. Then the third is verifying compliance with relevant laws, regulations, and industry standards, and also identifying the areas for improvement in the operational efficiency and risk of management. So bank audits involve detailed testing of the transactions, its balances and procedures, as well as reviewing documentations and interviewing key personnel. The audit process culminates in the issuance of an audit report, which provides an opinion of the fairness of the bank's financial statements and may include recommendations by the auditors for improvement in the area of its operations and work. Audit plays a crucial role in maintaining the integrity and stability of the banking sector by providing stakeholders with assurance about the reliability of financial information and the soundness of the internal controls. Thanks for watching. For more such videos,